So, hello and welcome everybody to this Zoom session. And in this one, I will be talking about the thing which is known as range structure. Okay, so many people are confused in this range structure. So, this is in this session, I will explain like how I see the range structure for you to understand and select those easy range. Okay, so in a bullish trend, whenever price makes a higher high, price makes a higher high, higher low, higher high, higher low, so and higher high. So this will be your BMS towards the upside. Okay, and this can be your stop hunt. Okay, so what will happen next whenever price retraces back inside this 50% of the range? So that will be the formation of new range, like this low to this high. This will be a new range for you to take buys from the discount zone, targeting another high. Okay, so that is how it is. And after that, price makes another higher high, another higher low. So same thing again you will do. You will mark the swing high and swing low and looking for buys at discount level below 50%. Okay, so the same thing here. Price makes another higher high, another higher low, another higher high, another higher low. So all these breaks are not BMS. Only the first one, which is responsible for change in trend. Like price were, for instance, price were going downside here, and here what happened? Price broken towards upside and taken out this high, this lower high, and this lower high as well. So here the BMS is, and all these minor structure swing high and swing low, all these will be your range structure, like here. So this is how I see range in bullish structure. And same thing, we look for buys at discount zone. So if price does not came inside the discount zone, so we will not look for buy. If price just retrace it just above the 50% of the level, so that will not be a good buy zone. So just below the 50% of the discount zone, that will be your buy zone, and this will be your range low to range high. After breaking some sort of highs, this will be your range. Okay, so that is how I see the range structure. And in a bullish trend, same thing happen when a price making higher high, higher low, higher high, higher low, higher high, lower low, lower low. So now price was making higher high, higher low, higher high, higher low, higher high. This was your range. This swing high to this swing low, this swing high to this swing low. After breaking this high, after breaking this high, and we have a BMS towards the downside. Okay, so that will be your, after that BMS, we have a formation of new range from this low to anything above 50% of the zone for cells. So again, same thing. So now we have the formation of range for bullish bearish trend. So all these structure will not be a BMS. All right. All these little structure will not be a BMS. These will be just a range structure for you. These are just a range structure for you. So that is how I see. And the first BMS will be the break in market structure, and after that's lower low, lower high, lower low, lower high, lower low, lower high will be just a range structure from this low to this high. So we will look for entry at discount zone, sells at discount zone, sells at discount zone. Okay, so that is how we see the range structure. So let's just go on to your chart. So this is a daily chart of Euro USD. So we had a break in market structure in here towards the upside. After that, we had a new formation of range from this swing low to this swing high, from this swing low to this swing high, from this swing low to this swing high. Okay, after that, there were no any other swing high. So we have a shift in market structure towards the downside. And what happened next? Price has taken out this as an inducement and broken towards the downside. So this will be your BMS. Okay, and this will be your swing high to swing low. Okay, this will be the swing low. So same thing again. What happened here? Price taken out, doesn't taken out this high, so this will be a liquidity zone, equal highs kind of structure. But what just happened here? Price taken out this as a inducement. So after taking out this inducement, we had a formation of this swing high to this swing low, and this is another swing high, so another swing low. So we have another swing high, another swing low. But this swing high to this swing low and this swing high to this swing low will be your range structure. And we have another one here. We have another swing low. We have another swing high. Why I'm selecting this as a swing high, not this one? Because this was a liquidity which and inducement which has been taken out by this high. So this will be your inducement zone. This one and this one. And same thing happened here. Why I'm not selecting this one? Because this was just an inducement. So price made another swing high and there is another swing low. Then again, price has taken out all this liquidity as an inducement and formed a swing high and swing low. And same thing again, price has taken out this as an inducement. So we have formation of new swing high and we have no swing low yet. So I'm expecting another bullish run to take out this high and off from somewhere here and form another swing high to swing low and take out this also as an inducement. So that is basically the range structure. So we have from this swing low to this swing high, this swing low to this swing high. We have a range structure, this swing low, this swing high to this swing low. This is a range structure, this swing high to this swing low. We have a range structure and we have a BMS towards the downside. So there is a change in trend after this BMS. So here we were in bullish trend completely, and here we were in bearish trend completely. So these are just a swing high to swing low, swing high to swing low. I use as a range, a specific range. But different time frames will tell you different ranges. So if you will join my session, Zarvitsan session, so I will explain this range structure in more deep. So that's for this session. Hope you enjoyed it and see you at next session.